Good morning, everyone. So Ella, do we have participants in the room as well?
Yes.
Excellent. Okay. Good morning, NCJAR. It's a beautiful day in New Jersey. It's one of the warmer days that we have. So thank you for joining us. We certainly appreciate it. So we have a very exciting discussion today. Even the pre-planning session got really interesting, and so I'm excited to be able to facilitate that discussion. So today's topic is going to be, for what it's worth, ensuring fairness in appraisals, right? So I'm sure we've all had our challenges in appraisals at some point in our careers. So that will be the main focus. So my name is Roro. For those of you who don't know me, I am a real estate professional, a member of NCJAR. And today with us, we have two fabulous speakers. One, some of you may already know, Bryan Greene. Bryan Greene is the Vice President of Policy Advocacy at the National Association of Realtors, where he oversees all legislative and regulatory advocacy on behalf of the association's 1.4 million members. I believe we're now over 1.5, right? Bryan, I think there's more licensees now. Bryan joined NAR in November 2019 and spent his first year at NAR raising the association's profile in Washington and nationwide on the all fair housing related policy matters as NAR's first director of fair housing policy. So welcome, Bryan. We're happy to have you. Our next speaker is going to be Larry Sharpe. Larry is he was born and raised in Newark, and he attended Boston University, and he is a New Jersey certified appraiser. So we will have both sort of ends of the conversation happening, and we'll field questions throughout. I believe there's a loud sound coming across the audio feed. Is it just me? Does anyone else hear that? Is there a problem with the audio for folks?
No.
The participants?
No.
No. Okay. So Randy, sounds like it may just be you. We're not hearing anyone else having a problem. Maybe try logging out and logging back in. Okay. Thank you for that. So we will be taking questions throughout, so feel free to add them in the comments, and Ella and myself will moderate. So we're very excited to have this conversation with you, as this is timely, and the goal is to understand what work is happening on a national level. We're going to learn a little bit about the history of appraisals and biases, current challenges we may be having in the field, case studies, policy discussions, and some work happening on a national level. What is our role, our realtors, in this process, right? So we'll give you some tools that you can implement right away to better represent our clients. We'll talk a little bit about the appeal process if you've never had to appeal before, an appraisal appeal, what that looks like, and really just advocating for our clients. And so at this point, I would like to, Ella, if you can launch the first poll question. I'm curious to see, I'm hearing that we have about 65, 70 participants, where everyone is in their industry experience, how long you've been in the business. It'd be interesting to hear. I'll give it about maybe 30 seconds, and it'll give us a sense of who's in the room. So this is going to be great because it looks like most people are in the 1 to 5 year experience, which is awesome. You'll get a lot out of this. Okay, maybe 5 more seconds. Okay, so it sounds like about half, about 54% are in the 1 to 5 year range. And then we have some industry experts as well. 10 to 25 years is the next biggest bucket, about 30%. And then the rest kind of fall evenly, 10% within the 5 to 10 year, and then 25 and over. So it'll be really interesting to hear insights and questions. So thank you so much. You can take it down. Awesome. So at this point, I would like to invite Bryan to share a little bit about what insights and work may be happening on a national level, and then we'll kind of field questions based on that.
Great. Well, Tez, thank you. Great to be with everyone today. So appraisal discrimination or appraisal bias is actually not only harmful to homeowners, but it also violates the Fair Housing Act. And I think we have to keep both in mind as we have this discussion. The 1968 Fair Housing Act prohibited discrimination in all housing-related transactions. So we're not just talking about it prohibiting discrimination in the sale of property or the rental of property, but also in mortgage loans, the appraisal of property, even homeowners insurance. So, so it's important to keep in mind that people who believe they have faced discrimination in their appraisal have a cause of action and have had one for almost 54 years now. But of course, we're also concerned about this, or the reason I would say the law is concerned about this is because discrimination in appraisals, causes financial harm. If you cannot sell your property for what it's worth, to quote the title of our session today, you have an injury, and if that's based on race, this flows from our constitutional rights, and the Fair Housing Act prohibits it. And it has a great social impact that if communities as a whole are devalued because of the racial composition of the community, and if it's unfair, that means an entire community is adversely affected, and that of course has great consequences socially. So that is why this issue is of great concern. I would say really in the last 2 to 3 years, this issue has received more attention. And I want to speak a little bit of sort of the evolution of the issue in this time that sort of led us here. Andre Perry, whom I know, is a Brookings Institution scholar, and he really, I think, put this issue front and center here in Washington, where I am, by putting out a study that suggested that African American communities saw their assets devalued. And it was a broad study, but focused a great deal on residential property. And his study, or he suggested in his study, that when you factored out legitimate factors that may go into how properties are valued, that he estimated there was a 23% unexplained devaluation for properties in African American areas. And he testified before Congress and started this debate really about whether African American communities were unfairly devalued after considering legitimate factors for property valuation. And then in 2020, I started to see some of the stories that you may have seen, newspaper stories that were detailing the examples of specific people who alleged that their properties were appraised lower than they should have been. And I want to sort of distinguish this issue because, the first description, the Andre Perry study, was talking about communities and the racial composition of the community. Here, people were alleging that the racial composition of the household, regardless of where it was located, was leading to lower valuations. And what's fascinating in two of the cases I'll mention is that they involve biracial couples. And so if you know anything about fair housing testing, often what you do to determine whether or not discrimination is occurring, you compare the experiences of, say, a black person versus a white person, meeting with the same real estate agent or housing provider to see, if they're, and they provide the same information and see if they're treated differently. In the fair housing work I've done over the years, what's fascinating is biracial couples kind of present sort of a built-in test, right? They literally live in the same household, and in the case of a housing transaction, they're they're equally qualified. They're putting forward basically their household's qualifications. And so in this case, with an appraisal, appraisers visiting this house where there's an African American spouse and a white husband, and the appraiser, in this case in Jacksonville, visited when the African American spouse was home and came back with an appraisal amount, and the husband and wife believed it was way too low, significantly lower than the asking price for their property, and they asked their lender if they could do the appraisal again. And the wife had a suspicion that her presence in the home could have affected the appraisal. And so she decided that she would absent herself from the home and her child, who was biracial, and hid photos. And her husband stayed home for the second appraisal. And the second appraisal came in, my recollection is close to 50% higher. Significant difference, great difference in price. And so that became a big news story. And, you only know what's in the news story, so you don't have all the other details, but cause concern. Then I saw a Washington Post story many months later, again, a biracial couple, this time an African-American man and a white wife. And when the appraisal was conducted the first time, the African-American man was home, and the comps that were drawn were from an adjacent African-American neighborhood, predominantly African-American neighborhood. I believe this was in Denver or another city in Colorado. Again, the appraisal was very low. They asked their lender if they could do this again. The white spouse was home for the reappraisal, and this time the comps were drawn from another direction and predominantly white community, and the appraisal came in at a better price, at an acceptable price. So those two stories, within themselves, illustrate the allegations, the problems that are being asserted. That essentially, many people believe that the race of the householder is affecting appraisals. And there have been many other high-profile cases. I believe there was a comedian, I don't remember whether it was D.L. Hewley or someone suggested that they were facing this in like Beverly Hills or somewhere, and then of course there were some other prominent news stories in Marin County. There was another big one in Indiana, which led to filing of a complaint with HUD and maybe a lawsuit as well. So there have been a number of high-profile allegations and lawsuits on this issue in just the past 2 years. So the Biden administration, really out of the gate, expressed concern about these issues, and the concern about the racial composition of the community has long been an issue. But even for individual homeowners, the claim that African Americans hide their photos has been a big issue in sales and appraisals for some time. And so the Biden administration created a task force called PAVE that is looking into these issues. I think it's property appraisal valuation. I can never remember what it stands for, but it's a task force that's looking at these issues, and it's a cross-government task force, including several agencies, including the CFPB, the Federal Housing Finance Agency, the Appraisal Subcommittee, and they're looking at both of these issues, communities and individual allegations. And they're supposed to issue a report this month with recommendations on, with findings and then recommendations on what should be done. from a policy standpoint. In the meantime, there have also been several studies over the last year or two on this issue. So Freddie Mac did a big study last year, and it's significant that Freddie Mac did this because they actually have access to the appraisal reports and can do more detailed analysis than what you're seeing in the media. And in their study, which they acknowledge was a preliminary study, they say there's a problem. And just to sort of paraphrase, one of the issues that they cited was when they look at appraisals. Well, let me back up for a second. First of all, what they considered in their study were appraisals that were done by agents who have familiarity with both African American communities and white communities. So these appraisers who are working in the African American communities knew the communities. They weren't, strangers to the community. And so they made a point of narrowing their focus on those so that they could determine, that they could rule out whether lack of familiarity was driving the results. And what they said generally was they found that if a home was in a predominantly African American community, the comps were drawn pretty close to the house. And if the home was in predominantly white community, the radius from which the appraisers drew the comps was twice as large, which means that there's twice as many comps to look at, which may allow for higher market homes to be considered. And so that was one of the findings that they said was of concern. And they met with the Realtors, they met with many industry groups to talk about it, and for folks to stress test it and suggest other things that they may want to look at and go deeper. Fannie Mae also did a study recently, and what's interesting, the summary conclusion of their study suggests that what they're seeing isn't so much a devaluation of African American communities, but an overvaluation of white communities. And so that's a study that has raised some eyebrows, and one that also warrants analysis. And then the National Fair Housing Alliance, working with the Appraisal Subcommittee, just a few weeks ago issued a study as well that looking at sort of the oversight of appraisals in particular, and where they express concern that there isn't more federal oversight in the same sense that there's oversight, say, of the lending industry. And so they're looking at standards and saying that there should be better standards in this industry. So a lot of moving pieces all at once. From a policy standpoint, we at the National Association of Realtors want to see where this Biden PAVE study lands. We have met with the Biden administration on this issue to make sure that our member appraisers are heard, as well as agents, expressing both concern about the allegations, but also wanting to make sure that whatever work is done with the input of people who are working on the ground. And then finally, I just want to stress what the larger implications are. So we know we have a significant home ownership gap among racial groups. This home ownership gap between whites and every minority group, between whites and Asians, between whites and Hispanics, between whites and African Americans. The gap between whites and African Americans is 30 percentage points right now, and the degree of segregation for those communities is also still very stark. And appraisals at the end of the day, especially if appraisals are devalued, run the risk of depriving people of opportunity, even when people succeed at home ownership. So, home ownership is the American dream, but if you are achieving it but not realizing the true value of your property, of course, you essentially have a bucket with a hole in it. And so we want to be sure, as realtors, as we do more to realize home ownership, that everyone gains what they deserve. And this, of course, has implications for future generations too. So if we can go back, even for African Americans and other people of color who have been homeowners, if they did not have the full equity to which they're entitled, it really, creates complications for future generations too, and limits that generation's access to home ownership. So there's that compounding effect across generations, even when people are achieving what should be the American dream. So we've got to get it right. We have to proceed thoughtfully and have all the right parties in the room. But we at the Realtors appreciate and recognize the attention that this issue is getting, so that we make sure that all aspects of our industry are complying with the law. So I'll leave it there. Happy to scan the chat for questions. I guess Tez will do questions and answers at the end of our presentations.
Yeah. I mean, there was one that came and you sort of answered it, so I'll mention that really quickly. There's so many data points that I was jotting down. There's so much to dig deeper into and some practical suggestions on how to risk mitigate. So Robin asked, what's the point of appraising lower than the market is due? The appraisers and or appraisal companies get fined when discrimination discrepancies are found. And so I know you alluded to the idea of wealth gap and bucket with a hole. And so if you want to quickly address that. And then
yeah, sure. And I would be very interested in Larry's perspective. I mean, my personal perception is that it may be unconscious, that I don't know that appraisers are going into communities and deciding, hey, I benefit somehow from lowballing this home. I think the example I described in Denver is illustrative, that depending on who was home, they drew the comps from different communities. And it's very possible that, someone unconsciously sees a black person in a house and says, okay, we're, in the black neighborhood, or we're, on this side of this divide, or just has a perception that, this is the community. And that when a white person's there, they may be thinking, oh yes, the community's changing, and they're drawing the comps from another direction. So that's one theory. That's, my theory. And then, in sales, generally, when it comes to sales discrimination too, we're finding implicit bias, unconscious or implicit bias, meaning that, people are having discussions, in the transaction with one group of people, of a certain background, and then when they're meeting with someone of a different background, they don't have the same discussion. Like maybe they're talking about resale value and certain, favorable assets of a community with one group, and then with another group, it just doesn't come up. Or they disparage a community in a conversation with one, people of one background, like disparage the schools or something, and then, when it's an Hispanic person, they realize that they would be disparaging the Hispanic school and don't say it. And so, sometimes I think these things people either are unaware of, or it's just, how people are living that bleeds into this transaction, but it has significant financial consequences.
Right, exactly. Thank you. Which is why we're having these discussions, right? So we can be aware of our own biases and see how we can protect our clients. So we'll keep your questions going as they come to you, right? We'll address them throughout and at the end. So Larry, I'd like to bring you on to share a little bit about what you're seeing and feeling in the field from an appraisal perspective.
Sure. Thank you for having me, and thank my good friend Bill Flagg for inviting me. It's a very interesting subject. And I think the first thing we need to know is the appraisal process is very subjective. It's not a science. So, opinions will vary, but they shouldn't vary greatly. I would piggyback with Bryan's statement that when an appraiser does an appraisal, I don't think it's based on overt prejudice. It's more based on education and what the appraiser was taught, because the appraiser gets the same fee whether the appraiser is less than the contract value, at, or more. So there's no motive for an appraiser to do any of that. So I came into the picture, and based on the fair housing study, showed that since 1980, minority homeowners were receiving appraisals 48,000 less than market value, to a total of 148 billion since 1980, and it's doubled. So I was curious, being in the field, because it's very rare that an appraiser would go out there and say, gee, this is a black neighbor, consciously think it's a black neighborhood, I must undervaluate it. So we went back in history, and which is my favorite subject. And of course, in 1866, we had the Civil Rights Act. And most of the appraisers at that time, and since then, were educated by the Institute. So, for example, in 1933, during the Roosevelt administration, they formed HOLC, Homeowners Loan Corporation. It was part of the New Deal. And they expressed certain things such as there were neighborhoods that they labeled C6, and that was the better neighborhood, meaning there was no Negro encroachment, but heavy concentration of Negroes in nearby sections. In 1935, the American Institute of Appraisers basically said locations were based upon race. In 1938, the manual, the FHA underwriting manual, said if there was a change in the same racial groups. So in other words, if Black people were moving into a white neighborhood, that would change the marketability and the value. In 1946, a common text was the McMichael's appraising manual, which actually rated the color of people. So Europeans were given a better rating, and of course, Mexicans and Blacks were given a lower rating. In 1973, the homogeneity of population contributes to the neighborhood stability, and problems of those groups can hinder community growth. In other words, if Blacks moved into a white community and it was mixed, it then became of lesser value. And the most important was redlining, which started in the 40s up until the late 50s. And there were actual maps that redlined areas that they simply wouldn't loan money in. So if you couldn't get a mortgage, what did you do? And these values, not only it was difficult to get a mortgage, but these values were they were just simply undervalued. So that's kind of how we were taught as appraisers. Since we've had a lot of educational courses, but it doesn't take out the endemic racism that's subconscious. So it was based on government practices, FHA, most major lenders, that's what was going on in the appraisal field. Which would bring us back to the current. There were 4 recent studies, California, Connecticut, Indiana, and California. The most egregious was a Black couple in Marin County, as Bryan said, were refinancing their home and received an appraisal of $995,000. When a white friend posed at the house on a second appraisal, the value was increased $500,000 to $1,482,000. There are 6 states accounted for over 50% of the valued homes in white neighborhoods, majority Black neighborhoods: Georgia, Louisiana, South Carolina, Mississippi, and Alabama. So again, I was curious, as an appraiser, because I don't walk into a house, and I don't know of any appraiser that would walk into a house and simply say, this is a Black owner, it has to be worth less. So the appraiser would use the fundamental appraisal process, mostly the market data approach, using comparable sales for the subject property. As Bryan said, it's a common practice to use comparables within the neighborhood, no matter what the neighborhood is. Preferably, we're advised to use homes within 1 mile that are no more than 6 months old and that are of a similar characteristic and style. If you're in an urban area, that's easier to do because it's a larger population and there are more sales. If you're in a suburban neighborhood, it's more widespread. And as Bryan said, you have a choice to use comps within 6 blocks and maybe 2 miles and maybe more. So that's where it becomes very, very subjective. The appraisals are normally reviewed by a SAR, S-A-R, and they are licensed appraisers who review our appraisals. Usually they're very, very good, and they should be catching some of these things. So a red flag would be if you're appraising a home and using a comp 3 or more miles away, that's a no-no. That's telling us that you're trying to project a value that's not there, and you have a preconceived notion of what the value really is. Which brings us to the process. If you do have a low appraisal or an undervalued, I like that word better, what do you do? VA, the Veterans Administration, probably has the best system, and it's called the Tidewater Act. So this process, as an appraiser, we have to notify the lender, the realtor, of the fact that we think it's going to not appraise for the contract price. The lender then has 48 hours to provide 3 comparable sales to the appraiser that they think will support their contract price. And objectively, an appraiser would look at those and actually go out in the field and look at those 3 comparables. And if they're appropriate, he can include that and increase the value. Oftentimes, realtors, when they provide those 3 comparable sales, they do it very generically. In other words, if the house sold for $400,000, they would look for comps starting at $400,000 and up to $450,000 or more. Appraisers do the same thing, except we go under $400,000 because how would we know that it's not worth less than $400,000? Realtors often supply comparables that are under contract. An under contract, of course, is not a closed sale, and we would look at those, but not give it heavy consideration because we don't know if the under contract is going to actually close, and if it's going to close at the price that it was listed for or even higher, and if there are any seller concessions. So again, the appraisal process is very, very subjective. Some of the things realtors could do to help themselves and help the appraiser are, of course, to bring comparable sales or email the comparable sales to the appraiser at the time. So if I'm at a house and the realtor didn't provide those comparable sales, I can't take a photo, which is required of all comparable sales. I would go back to my office in Maplewood, and then the realtor would provide the comparable sales, and I have to go back to the property again. So you want to do that at the time the appraiser's there. Oftentimes, a realtor, when I call, will say, well, I'm very busy. I'll see if I can fit you in. Well, appraisers are kind of busy too. And so we try to accommodate the realtor, but that's kind of the wrong approach. If there are any hazard conditions, such as ice or a dog, let the appraiser know. I have been in backyards with Doberman pinschers that are fenced in, and I was not warned that there was a dog back there. Do not follow the appraiser around the house. Not only is it annoying, but it's very hard to take pictures if the appraiser is standing in front of you and asking many questions. So after I'm finished with my inspection, I'm always happy to discuss the property with the realtor, except don't ask the realtor what he thinks or what she thinks, because we're not allowed to discuss it. So in conclusion, I would say the process is getting better. There are ways to, if you feel the appraisal is biased for any reason whatsoever, you could and should make a complaint. Now, that doesn't mean that if it didn't come in at $500,000, that is biased. That means that's the appraisal's subjective opinion. But if you feel that there was something else going on and the appraiser was biased, you can file a formal complaint, any one of three places: Division of Consumer Affairs, New Jersey Office of the Attorney General, which we're licensed under, HUD, or the actual lender. So I think that's how we got to where we are with the situation where urban properties or properties in minority neighborhoods, again, are not necessarily undervalued, but in Caucasian neighborhoods, often they may be overvaluated. And don't forget, we're in a very, very accelerated market. I've been appraising for over 45 years. I've never seen a market like this. It depends on the area. Some areas have increased 10 or more % per year. It's very difficult for the appraiser to keep up with that. We're often asked to use time adjustments, meaning using that 10% or more to add value, because if the house closed in September, and I look at the comparable closed in September, I also look at the contract date. So in other words, it may have been under contract in June, which means the meeting of the minds was in June, and that's when the value occurred. But now we're talking 3 or 4 months later, and at the rate of 20% increase a year, that $500,000 house could be worth more than $50,000. Appraisers don't like to use time adjustment because, again, it's very hard to prove. There are several studies, but it's difficult to prove.
Yeah. Thank you so much, Larry. That was amazing. I took a lot of notes here as well. And I think one of my favorite words you used at the top of your speaking is subjective, right? Appraisals are subjective. And this is something I tell my clients, if you were going to hire 2 different appraisers to appraise the same home the same day, guaranteed they'll come back with different numbers, right? So I think that's sort of the foundation of where we should start. So I've seen some questions, so keep them coming in the comments. And so Bryan said, 23, some of the studies mentioned that there was a 23% unexplained devaluation, and then up to 50% difference in in value, right? In terms of when a person of color was at home versus not. So we understand. So let's just look at numbers, right? So let's not pay attention to race for now. We understand that the same home can have different numbers. There's range. It's subjective. I always say real estate is art and science, right? It's not an exact science. And when we do comps, we typically give our clients a range, not an exact number, right? Because we know that the value of a home is what a buyer is willing to pay for it, right? But it's really interesting that a 50% difference could happen even with a different appraisal. Right. So even knowing that if we send two appraisers to the same home, they will likely come up with different numbers, but it should not be a 50% difference. Right. That's something to question. We heard about approach to how we do. So if it's not undervaluation, perhaps it's overvaluation of certain homes. Right. So that's another angle to look at. And so Larry told us that there's certain guidelines that appraisers have in terms of, 6 months or less, ideally within a mile, ideally. And so the idea of, okay, how close or how wide do we go? That could be part of it, right? And so there are some historical basis for this, right? So we've all heard of redlining. If you don't know what that is, you've heard today that there were legal documents written that if a home was within this area, the lenders would not lend or insurance companies wouldn't insure. And they were written into the deeds too, that I believe it could not be sold to, person of color and things like that. So there are real tangible historical facts of why we're here. And some of it, as mentioned, is subconscious. We would all like to think that people don't walk into certain neighborhoods or homes and say, this is not worth this or that. But there are things that we can do, right? So we talked about the history. We talked about why these differences happen. We also want to talk about the implications and some of the solutions. So the question about why would they do this if the fee is the same, it's not so much about them. It's not what the appraisers get or don't get. It's the consequence of it continues to broaden the wealth gap for people, right? So real estate is a way to build wealth and generational wealth. And if I think the best example I heard Bryan say is a bucket with a hole, right? You try to fill in your bucket, but there's a hole, right? That keeps seeping. And so that's the implication. It's got implications for generations. And so let's talk about let's see. So there was a question about, so what are some things we can do, right? So while I read through questions, actually, Ella, can you launch the second survey for me? I'm curious if any of us have had to defend an appraisal. I'd love to see who may have had to do that. So what are some things that we can do to better protect our clients? What are some things we can do to advocate for our clients? So I'll give you an example from a process perspective of just fair housing, period, right? Not specifically appraisal, just a good process for agents and everyone else to have a process, right? So if a buyer or seller is coming to me, I'm asking the same questions. I have the same intake process. I require a pre-approval for all. It doesn't matter if it's an uncle, a cousin, a family. That's just my process. So that's being fair for everyone. So I think that's something that we can do in our businesses as well. What are some other things? So Larry, you mentioned the idea of, and I think everyone has different understanding of how we should or should not interact with appraisers, right? So what is considered influencing and what is considered helpful. So what I hear you say, and I've heard this in different trainings I've taken too, is it is acceptable to provide value information, right? So someone in the comments also said that there was a change where lenders were required to select someone from a pool of appraisers as opposed to go to the same appraiser. That sometimes results in an appraiser that may not be familiar with that area. So how helpful would it be to come up with a set of comps of this is how I price the home? And by the way, one of the things I ask in my intake form when I'm representing sellers is, what is the list of improvements, the dates, and the value that is going into the appraiser package before the appraiser leaves the home, right? And so what are some things that we can do to protect our clients so that we are defending the value before it needs to be defended, Larry?
Well, your package seems very good. And if I had that on all files, it would be very, very helpful. An acceptable variance in appraisals is within 10%. It should be closer to 5%, but a maximum of 10%. So if I'm appraising the property at $500,000 and another appraiser would appraise it at $525,000, we don't necessarily disagree, difference of opinions, but we're close. Oftentimes, an appraiser will be, if he's appraising a house in Maplewood and he comes from Times River, that doesn't mean he cannot appraise that home, but according to ethics, he's supposed to have good familiarity with the Maplewood area. I've been asked to do appraisals out of my turf, and ethically, I would normally advise the client, normally the lender, that that's not my turf. I don't do many appraisals there. If you still insist or want me to do it, I may do it. I will consult at least another appraiser, maybe a realtor in that area, but I'm usually not comfortable. So if you see an appraiser who's from, again, let's say Tom's River, miles away, again, that doesn't mean he cannot, but it does mean he probably doesn't have the familiarity with somebody who's an appraiser in that county. So yes, providing comparable sales is the key. You could use under contracts. We will again look at them, but the facts there are not very good. It could be over 6 months. I mean, if I'm on a certain street and the house is 8 or 9 months old, but it's on the same street, I'll use it maybe as a fourth or maybe a fifth, and sometimes even a sixth comparable sale. So again, providing the appraiser with the comparables is good. Do not overwhelm him and do a generic search where you come up with 15 or more supposed comparables, because we know that you haven't done your job and you really haven't, you've done a very quick search.
Yeah. Something I do too is typically, when I submit an offer, even in this competitive market where we're like, does it even make sense to do comps anymore? It's sort of like, what's the highest you can bid type of environment. I still do comps. I save them so that if we need to defend it, right, we have it. And by the way, if I'm representing buyers, I would like to see the appraisal report. And I love to see my comps reflected in the appraisals report, right? So it lets me know that we're sort of aligned. So I think that's another way. For the newer agents, so the poll resulted in 50-50, pretty much 48-52. About half of us have defended appraisals before, half of us have not. And so there's a process for it from the lender where it typically involves, sort of poking holes in the comps that were used. I had to do it recently for new construction, and one of the things that some of it is not numerical, right? So it's not, the value itself, it's sort of like the market. And one of the things that the appraiser said was essentially it was like a very neutral market where we're in such a shortage of inventory, right? So that was one of the things that I pointed out. Staging comes into the conversation as well, right? And so Bryan mentioned as well about removing sort of personal items or photography and stuff like that, so that I think even outside of the conversation of appraisals, just so home buyers, the people who are buying the home, feel like they can imagine their lives there. It doesn't feel like they're sort of going into people's homes. That's just generally, I think, a good rule of thumb for staging. And the way I phrase it, in case this is helpful for anyone else, is, I don't say you got to take, your photos down so people don't know there's Black people who live here. The way I say it is like, hey, how you go on vacation and we go to a hotel and there's hundreds of people that have been in that room, and yet it feels like your room. Right? Why? Because there's no pictures. It doesn't feel like you're intruding in someone's space. And so I think even the framework of how we position it has to do a lot with how, people feel, right? What they have to do in this market. I find that that's helpful. There's also PSA certifications to kind of tighten up your pricing game and things like that. Question for you, Bryan. So you mentioned that there's conversations happening with the Biden administration with the PAVE, and I think I wrote down what that stands for somewhere up here. Let's see. Property appraisal and valuation equity, right? And so this involves both realtor professionals and then appraisers, right? So I'm curious to hear what the appraisal's point of view is here. So do they feel like there is, an issue to be recognized with, or do I feel sort of attacked, in this? So, what is their take on it?
Yeah, no, I appreciate that. And yeah, that acronym, you can see that they're trying to make a word, however they could. So PAVE work. I think they're just, as with any group, mixed reactions. I can tell you back 3 years ago when Andre Perry testified before Congress about this issue, I would say then the appraisal industry as a whole was very defensive. And Larry made very clear at the outset that appraisals are opinions of value and that there is subjectivity. I think many appraisers, at least writ large, their response to many of these allegations has sort of suggested that appraisal's more of a science, and that they're very much, we're the by the numbers people. We're unemotional, unmoved, like real estate agents who, get, touchy-feely about properties. We're looking at numbers. But Larry, I think aptly describes the history, which was very subjective, right? And, and how people had been trained and, how there's still that sort of legacy influence potentially. And so, and we know in all other industries, whether it's lending or what have you, that subjectivity, even with those numbers, can enter in. And so I think people have come to accept that there may be unconscious bias, and the situations, the repeated stories are disturbing enough that folks are confronting it and trying to unpack what's going on. One study I did not mention when I spoke earlier, but is really key, is a study by the Federal Housing Finance Agency, FHFA, the folks who regulate Fannie Mae and Freddie Mac. They put out a study in December. They put out a blog post about a study they did, where they said that just going through the appraisal reports, which they have access to, they found many race-related red flags in the comments. So they are saying that in recent years, just looking at the appraisal reports on their face, appraisers are talking about the racial composition of communities. Whether it's like gentrifying or changes, immigrant population, people are saying this stuff in some of the reports. So that suggests that it could be influencing appraisals. And, I imagine, Larry and other appraisers would say that language shouldn't be there at all. That's not the basis for an appraisal. So I'm going to post in the chat that FHFA blog post so you can see what they're saying.
Excellent.
I'd like to add to that as an appraiser myself, when I saw the reports, I was surprised. I wouldn't think that, and I've been doing this over 45 years, I wouldn't think that an appraiser would consciously go in and have a preconceived notion. But as I read and I thought about it, there's no question about it. It is subconscious. And it's based on training and education. So as late as 1976, some of the text manuals would tell us that the racial composition of the neighborhood was important, and that they had no responsibility as appraisers, because we wouldn't determine that. That was just a fact, that if it was a mixed neighborhood or whatever. The other thing I'd like to interject is that although the buyer in most cases pays for the appraisal, he's not what we call the user or the end user. So the lender owns the appraisal, which the buyer is entitled to a copy of the appraisal, but he doesn't own it. I would suggest, if you question the appraisal, look at the appraisal carefully. So for example, you may have an area where there's a house, there is a fireplace, and the comparable doesn't have one. And that's where it becomes subjective, because I could say a fireplace is worth $5,000. Another guy would say $8,000, and another would get very minimal of $2,000. The same with a swimming pool and other amenities like that. So as a realtor, if you want to protect your seller and your buyer, you really want to review the appraisal. They're not difficult to read, and look at the grid section where the comparables are recited, and see if the appraiser didn't give that fireplace the credit that they should.
I'm so glad you said that. I was going to share an example, and it was exactly what you said. So I helped someone with the refi, and she said, Tez, I mean, I did a quick comp for her, and it was nowhere near what the appraisal. I said, give me the appraisal. The fireplace was not, we don't have to be appraisals. There's just certain things we know add value to a home, and that was not there. And there were a bunch of things that were not there. And I said, I'm not an appraisal, and I can poke on this all day long. I mean, you need to have, looked at or someone else. So this is actually an interesting conversation that takes us into one of the questions that's in the comments, which is what is the reason FHA appraisals come in lower undervalued? And before I ask Larry to address this, I just kind of want to connect it back to the bigger picture of what Bryan said about this idea of a bucket and a hole, right? So think about FHA and think about who are the people who tend to qualify for FHA, right? So these are folks who probably, whose parents either didn't own a home or they're immigrants, or if they did own a home, maybe their home is not valued or, as much. And so perhaps they don't have equity to give to their kids' education. So now the kids have student loans. So their DTI in the back end is higher. So maybe they don't qualify conventional. Like, you see how it all connects, right? And so this is the impact that it has. And so even in the current market, a lot of sellers and agents prefer conventional over FHA. And, there's real reasons for that. Obviously, they want to minimize risk for the seller. But I found that I think if we understand truly what could come up with FHA and if we can risk mitigate for that, right? So the beautiful thing about real estate is everything is negotiable, right? Everything is negotiable. And so we can set up the agreement or the attorney review such that there's lower risk on the seller, even for an FHA. With that being said, there is this, notion that FHA and VA loans tend to come in lower undervalued. And that could be one of the reasons why a lot of buyers are having a hard time getting their offers accepted. So what would you offer to that question, Larry?
Well, I don't agree, because as an appraiser, whether I'm doing it for the Veterans Administration, FHA, or one of the major banks, the procedure is almost exactly the same, if not exactly the same. So I don't think that's an issue. I would appraise the same house if I were doing it for the VA as I were for a major lender. What does play into the picture, again, are there comparable sales? We all use that same market approach, unless, as you said, it's a brand new home. And then we use what we call the cost approach, meaning what does it cost to build that brand new home? And we don't normally use a cost approach on an older home, because then it's, again, subjective. Right. And we have to figure out age. Do we devalue it at 50 or more %? So no, I don't think that plays a picture, but the appraisal, when the lenders select an appraisal up until 1880, 89, the lender could choose any appraiser he wanted. And often, of course, a lender wants that deal to go through, so they would pick an appraiser that was kind of soft or kind of gave away the values. In 1990, rather, the government stepped in, and we were not licensed as appraisers until 1990. Before that, anybody could say, I'm an appraiser. And if the bank wanted to hire that person, they could. So in 1990, we did become licensed. It did help. It was a rush procedure, so a management company was assigned to each lender, and the lender would go to the management company and they would assign the appraisal to an appraiser. And it was supposed to be based, fairly, but I don't think it was. The only exception was the Veterans Administration is very strict about that, and the lender cannot choose the appraiser. The VA does. They do it in a very even manner.
Got it. So there's a comment about, thank you, Bryan. Do you have to drop? Okay. Thank you so much. We appreciate you being here.
Yeah. Sorry. Thank you very much for this opportunity. And feel free, folks, to reach out to me if I can be helpful. I'm at bgreene, like my last name is spelled, @nar.realtor. Thanks for having me.
Thank you. Thank you so much, Bryan. We'll keep the conversation going a little bit longer with our appraisal areas. I'm sure a lot of you will have questions. So one of the questions is cosmetic repairs are ignored on conventional FHA and VA tend to pick out repairs to justify lower value. Now, I know that part of the appraisal, in order to get loan approval, some things need to get repaired. So that's part of it. Just adds a little bit more contingency, a little bit more work. But does that impact value? So it becomes a requirement to maybe paint a chipped paint or something like that. But is that something that impacts value?
That's a great question. The appraisal, if you require repairs, let's say you wanted a new roof, you would include that in the value. So you would say it's worth $500,000, but you must put a new roof on the house. VA, as opposed to common thinking, is very lenient on repairs. We're only supposed to put repairs that are of a safety nature. So if there are 4 steps or more, we have to require a handrail, for example. Cosmetic painting, VA does not get involved in, and most even mechanical issues. The VA issues their notice of valuation, and they send it right to the purchaser, telling them, we're not responsible if there are any repairs. They encourage you, and I as an appraiser encourage them to get a home inspection, which is much more specific, often using cosmetics. But for VA repairs, cosmetics do not play into the picture. It's only major mechanical issues. FHA, for that matter, is much different. They have a laundry list, and they do require cosmetic repairs. A chip wall to be painted. I don't think that's a good idea, because most buyers are going to repaint the house anyway, and it's not going to, if you painted that one room, it wouldn't add to value at all, in my opinion. It may add to marketability a little bit.
Yeah. And just a strategy here for my buyer agent is, and I learned this from another agent, actually, when I represented a buyer who had an FHA. Conventionally, it was an off-market property. We made a great offer, but my buyer had an FHA. Is in the attorney review, they add language that said lender required repairs can be done by the buyers. So this is separate from inspection, right? So if the seller is concerned about there being additional costs for lender requirements, which is usually painting tends to be, or rails, which is low cost, put that up front and say lender required repairs can be done by the buyer. It pretty much becomes a conventional loan at that point, right? So hopefully this is a good tip. So there was someone about when we provide comps to appraisers, they don't want them. So I feel like this is more personality versus your professional ethics. Is there anything about your professional ethics that does not allow you to accept or welcome comps and information from agents?
There's nothing ethically that would stop us from looking at comps. I encourage it. Most appraisers do encourage you to bring comps. But again, oftentimes a realtor will provide too many comps, most of them not relevant to the subject property. So ethically, no, there's no reason we can't, except if you have a package and you happen to put money in that package with the comparable sales, of course, that's a no-no. And bear in mind, when you're dealing with FHA and VA, you're dealing with the federal government. So if you do something that's a no-no, it's a big problem, because you are dealing with the federal government. So comparable sales, if they're good ones, are welcome. But again, do them at the time the appraiser's at the property, rather than a day or two later. It's too late.
Right. Right. And I think that's what I heard too, is information, not influence. I think, we have to be clear on providing value and information, pulling in, the plugs for them versus influencing. Right. So I was traveling internationally for 3 weeks, and I had prepared something for the appraiser, and the home happened to have a solar panel. She had a question about the solar panel. So if I had not prepared that, and if I hadn't made myself available, if you had any questions, reach out, maybe there would have been an issue with the value, and it was an FHA loan, right? And so I think if we make ourselves available with information, I'm sure they'll welcome it as well, because there is that subjectivity, there is that gap, there is that range, and that'll help them fill in the gaps for that. Okay, so let's talk some interesting stuff. So some common misconceptions, Larry. So talk to us about what counts as a bedroom. Does it have to have a closet? Does it have to have, does it have to be a certain size? Maybe bedrooms in the basement, and, all these, where to find square footage, maybe for our newer agents, right, to prepare comps. So these are all interesting bonus conversation that we were talking about during the prep call.
Okay, I was afraid you'd ask that question. So just a note on solar panels, since they're relatively new, I don't give the solar panels any value at all, because oftentimes they're rented, not owned. Sometimes it's a 20-year rental thing, and we're not privy to the fact that they're owned or not owned, So as far as bedroom size, first of all, basements, I've seen gorgeous basements with kitchens and bathrooms and bedrooms and closet space, and even they're heated. We do not, under Fannie Mae regulations, basement, bedrooms, kitchens, and bathrooms are not included in the room count. Now, that doesn't mean that it doesn't add value. So at the very bottom of our grid sheet where the comparables are, there's a section for other. So when you put finished basement, I often put 75% finished with a bathroom, and we include bedrooms, if any. It does enhance marketability. It definitely enhances value, but we cannot consider the bedrooms and the bathrooms in the basement, even if heated, in the room count. Typically, a bedroom should, most important, should not have a privacy violation. So if you're going through one bedroom and you can only get to the other bedroom through that bedroom, it's a privacy violation, and it's not considered a bedroom. We could call it a den or an office or a nursery, but not a bedroom. Finished attics, similar. Each town is different. Actually, Bill Flagg had a situation where he sold a home to a person in South Orange years ago, and the bedroom was considered when the buyer bought the house. And when he went to sell it and the CO inspector came, he said, you have to redo the entire staircase to make it wide enough so it's not a fire hazard. So attic bedrooms, again, they should be heated. It has to have a closet. You can't enter through another bedroom. And if the attic rooms have very, very sharply pitched ceilings and walls, I may be reluctant to include it as a bedroom, even though, in fact, the person is using it as a bedroom. There's a bed in the basement. There's a bed in the attic. But that doesn't make it a bedroom just because you put a bed or a cot in there.
Does it have to have a basement? I was told that if, depending on when the home was constructed, the coding, laws or whatever back then, if it didn't require it, that it didn't have to have a basement to be considered a bedroom?
Just not much of your question. In other words, regardless, a bedroom in the basement will not be included in the sale. Now, the city inspector, in almost every town or city I know of, they will not allow sleeping quarters in the basement for safety reasons, fire hazard reasons, if that answers your question.
Okay, great. So there's a question about if there's a property that is under contract, but the listing agent has shared the contract price, will those comps be useful? And I'll even add to that if they happen to share if the property has appraised at that value or not, if it matters or if that's helpful.
Another good question. Again, as we know, we have privacy laws, so that agents should not be disclosing that information without the buyer and or seller's permission. I'll look at it. I may even use it as a 5th or 6th comp. I will give it consideration. Most appraisers will. But more appropriate, you really want to use that closed sale because, again, we don't know if there are closing costs involved. I had a comparable submitted to me in the city of Newark of a brand new home that sold for $550,000. Well, the comparables were really in the $525 range, and I couldn't understand why 4 or 5 of those brand new homes sold for $515, $525, and this one sold for $550. Similar square footage, similar location. But I called the realtor, which is what a lot of appraisers do not do, and she said, "Sure." There were, I think she said, there were $30,000 in seller concessions. So what we do with that, of course, we have to adjust that. We have to knock off or minus that sales price because the seller didn't receive $550,000; they received $520,000. The lender called up and was surprised that I even did that, and I said, "Well, that's what an appraiser is supposed to do." So again, an under contract will be considered, but it's not as preferable as an actual closed sale.
Yeah, and I think it all depends on how things get done during attorney review, right? So sometimes concession, there may be an actual addendum to the price, right, of the home, and it reflects that. Sometimes it's just considered a repair, and the full value shows. So
Sure.
it's great that you take that extra step. And so I thought we answered this, but there's a question about what if the basement bedrooms are legal and has egress windows? Do they still not count?
Well, when you say legal, does that mean the city or the township approves of it? I don't know of any township that would approve of typically basement are less than 50% above the grade. So I don't know of any town that would permit a bedroom, even if it's heated, even if it has a closet, even if it's beautiful and has an adjoining brand new bathroom. Again, it's more of a fire hazard type of situation. Again, basement rooms rarely are considered as rooms. The exceptions would be if it's above 50% of the grade level. Of course, it has to be heated, and it should have two means of egress and ingress. But getting back to what we were just talking about, a lot of times I hear from a realtor, I've had 9 offers on this house, so it must be worth the value. So I had one in Roselle recently, and that's what I was told. And okay, that's fine. And unfortunately, I came in about $40,000 under the value, but I was curious, so I checked MLS, and it showed that deal didn't go through, and the house was still on the market 30 days later. And I was curious what happened to the other 8 buyers that were lined up. And we don't even know if those 8 buyers were necessarily qualified. Maybe they were. We don't know if their offers were below the market, below the asking price, at the asking price, or above. So it's interesting to know there were 8 or more offers, but it's hard to place a value based upon that.
Yeah. And that's something that I include in my appraisal package, by the way, is number of offers. And if they would like, the details without personal information, they might need that, as opposed to me saying there were 5 offers. I'm sure they're not going to take me at my word, but something to include. So here's an interesting question that I was actually planning to ask you about. So what happens when the house sells for $500K, but appraised for $485, and the buyer paid the difference, regardless of financing type, right? And so how do we go about considering those comps without knowing the appraisal value? And also, when you appraise, right, I don't know if you have access to what that home appraised for versus just what it sold for. So how is that typically treated?
We don't have that information available to us, but the bottom line is what it actually sold for. So whether the buyer paid above the appraisal, which happens, and interestingly in VA and FHA appraisals, it's stated that the buyer, in the amendatory clause, the seller states that the buyer does not have to continue with the transaction if it under appraises. They're not forced to proceed. So the fact that they paid more than the appraised value, we don't know, and it's not important. The fact is the meeting of the minds was at a certain price.
Yeah, and this is something to note. Someone mentioned that, agents are not really entertaining FHA, even though there's an FHA addendum that says that it needs to appraise. If for some reason they have the capital to bridge the gap, that is a possibility. There's nothing, stopping the buyers and the sellers from doing that. There's also, for those of you who may be listening or driving and not watching the chat, there was a question about, do you agree that, agents should meet the appraiser at the property? I say for seller clients, absolutely. with the package, right? And I usually just say, you know, take a look around. I'm not going to be, and you're here, but if you have any questions, let me know, and sit and, you know, give them the package. Sometimes I may even go for buyers. It really depends on the other co-broker that you're dealing with. Some people are more hands-on. Some people don't want to do that, right? To your question, Larry, you answered about the basement. There was a property under contract. I'm representing the buyer. It was marketed as a 5-bedroom. 2 of the bedrooms were in the basement, beautifully finished. You would never know you were in the basement if you were there. The appraiser appraised it as a 3-bedroom because the three bedrooms are upstairs, right? Good for my client because it appraised lower than, you know, the offer price. But you know, that's usually how it gets appraised. I think I covered a lot of the questions. Let's see if there was anything else interesting that we were going to talk about. Oh, okay. Number of rooms on a listing. Is it like, which room should we be considering when we're saying this house has this number of rooms?
Another good question. It's almost annoying when you're looking at a 6 or 7 room colonial and the realtor states there are 10 or more rooms, and they include the laundry room, the mud room, and so forth. And we have to look through that listing because it's not always detailed. Sometimes they'll say first level, and they're very specific. We don't know if the 4th, 5th, or 6th bedroom is in the attic, which may or may not include, or even in the basement for that matter.
Right.
So, yes, that's correct. The other thing about meeting an appraiser, never, and as far as I'm concerned, never tell me that there's a lockbox. Go right into the house is vacant. Some appraisers will. I don't, for a few reasons. If there's something missing or something broken, I don't want to be responsible. And I don't know what's in that house, so it's not a good idea. Although some appraisers do go into a vacant house, unless it's a foreclosure type of appraisal, it is the realtor's job, either the listing or the selling agent, to meet the appraiser there.
Mm-hmm. So what was your answer about which room should we include?
Bedrooms. Don't forget, bathrooms are not included in the quote total in the room count, but they are, you know, considered, you know, whether it's 2 or 3 bathrooms. So yes, bedrooms, living room, dining room, kitchen. Above the grade is the important term. And again, if it's in the basement, if it's over 50% above grade and heated, possibly. And we would check with the assessor because often we disagree with the assessor. So the assessor may include that or may not. So I usually check with the assessor. I get a copy of the tax card, and that tells me what he or she didn't include, and I'll follow their lead because that's
living spaces like living room, dining room, kitchen, bedrooms, like no bathrooms or.
That's included in the square footage, yes.
Right. But not the number of rooms. Okay, I just also dropped in the chat a link to look for square footage because I know that in New Jersey, because we're a highly litigious state, we don't advertise that in our MLSs, but for our comps, we need them. So there's a link there. There's a really good question. We're going to wind down. I know this is really interesting conversation. We have just about everyone with us still. Would appraisers generally accept private sales not documented on the MLS?
Yes. But again, it has to be documented. So if there's a private sale, I would ask for a copy of the HUD. I'd speak to the realtor, but most important, a copy of the HUD, because I don't know if the realtor is giving me a legitimate sale or not. So that, or I check with the tax assessor, but oftentimes if it just closed a week or 2 ago, they may not have the information. And again, the HUD one will tell me if it closed.
Excellent. Okay. So we hope that you found this really helpful and, you walked away with some good tips. Ella, if you can launch the last poll question, that would be helpful. So I'll just kind of summarize quickly what we as agents can do to risk mitigate for our clients and better protect them. So, be on top of our comp game, right, and state them. And for representing buyers or sellers, have that comp package. And it sounds like some appraisers not accepting or wanting comps may have to do more of a personality or ego thing, more so than an ethical thing. So I would do that and make sure that you have a list of improvements and dates and amounts in that package, and even how many offers. come in and fill in the gap for them and make yourself available to answer questions, provide information as opposed to influence, and do that during the appraisal and not after, as people don't like to walk back their work. The newer agents, so it was about 50% were 1 to 5 years. There's different certifications, including the pricing strategist. What does the A stand for? Larry, help me.
I'm sorry, the A of
PSA certification, pricing strategy advisor, I think, is what it stands for. So the certification you can get, but really and truly, it's a good starter. But you hone in your pricing when you go look at homes, right? And when you're doing your comps and when you're looking at the appraisal reports to see, if there are similar comps used and things like that. Staging is a really good risk mitigation. Not only would it help your clients, your seller clients gain the maximum return because it widens the net for, how many people would be interested in that home, but it's a really good way also, because we're human and because we're operating our own sets of biases, whether we know it or not, it will help in that range of gaps, right, of valuation, to have it staged and professionally cleaned. And then if you need to appeal the process, understanding the process, working with your lender or even the other agent, right? So coming up with comps again and understanding and poking holes in the appraisal if it doesn't make sense, if there's some features that are missing. And then, for FHA buyers, hopefully you've gotten some tips on how to make the offer stronger and make it as close to conventional as possible. Sometimes it may just be as easy as picking up the phone and say, hey, does this buyer qualify for conventional? And if the monthly mortgage and some of the financing is not a whole lot different, it could just be that, right? So they may very well qualify. So hopefully this has been great and you found value. 97% of you said that, yes, I feel better equipped to manage appraisal challenges. So that's awesome. I'd say that's a win. So thank you so much for spending this time with us. And I want to say thank you to NCJAR for investing time in curating this event and for asking me to moderate. I had fun. I learned a lot, and I hope that you got some value from this as well. Thank you to our speakers, Bryan and Larry, Crystal, everyone with NCJAR. I wish you a very good Friday, a productive one. Thank you for joining us.
Thank you for having me.